Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped toward 97.2 on Tuesday, extending Monday's decline as traders passed Federal Reserve commentary on interest rates. Last week, the dollar gained on strong US economic data and rising treasury yields, but that bullish momentum is fading as rate expectations swing. Treasury yields held steady while Deutsche Bank forecasts that upcoming PCE data may ease concerns on inflation, reducing pressure on the Fed to act again soon. WTI crude rebounded on Tuesday, rising 2.1% to settle at 63.6, snapping a 4-day losing streak. The bounce was fueled by geopolitical risks and stalled supply talks, outweighing oversupply worries. NATO pledged a strong response to Russian airspace violations, while Ukrainian drone strikes on Russian refineries and pipelines raised concerns over energy flows. Prices found support, but headwinds persist. OPEC Plus and non-OPEC production are climbing, demand growth is slowing, and electric vehicle adoption is accelerating. Gold surged on Tuesday, powering to a new all-time high of 3,791 during the European session, extending Monday's near 2% rally. The metal continues to be driven by mounting expectations of further Fed rate cuts and strong safe haven demand amid political uncertainty. Investors are piling into gold, drawn by both monetary policy prospects and ongoing geopolitical risks. The immediate catalyst remains the market's conviction that the Fed will ease further, but gold's allure as the traditional safe harbor asset is amplifying the rally, sending prices decisively higher. The dollar weakened against the yen on Tuesday, slipping toward 147.65 inches early trade as investors absorbed Fed officials' latest policy remarks. The Bank of Japan last week kept rates unchanged at 0.5%, but announced asset sales in ETFs and REITs, a hawkish signal aimed at policy normalization. The tension lies in expectations versus action. Markets anticipate a BOJ hike by year-end, yet its current stance leaves the yen lacking sustained momentum. The euro edged higher on Tuesday, climbing back toward the 1.18 level. Mixed eurozone business activity data provided modest support, though caution prevails. Flash PMI figures showed manufacturing unexpectedly contracting in September, while services beat expectations with faster growth. Germany reflected the same, split weak factories offset by stronger services, whereas France saw both sectors in decline, stoking concerns over the region's second largest economy.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.